How to choose a real estate market to buy rental properties. Hey everyone, welcome to the channel. I'm Clayton Morris, longtime real estate investor. A big question we get, so what makes a solid rental market? This is one of the most important pieces you need to have in place before you invest in real estate. There are a lot of criteria that can go into choosing a city to invest in. And in this video, I'm going to share 10 major factors to consider when you're looking at a rental market. The biggest mistakes I see investors make when choosing a place to invest, and a whole lot more. So everyone, get out a piece of paper and a pen or a pencil and get ready to take some notes, because you're going to learn my best tips for identifying a sustainable and profitable rental market. But before we do, if you like financial education, becoming a smarter investor, then please subscribe to the channel. Join the nearly 200,000 of like-minded individuals working to become more financially intelligent. So when it comes to choosing a rental market, there are two huge mistakes I commonly see new investors make. Number one, buying a rental property in their backyard. And number two, choosing a rental market from a list online, like a random list. This is as good of a strategy as putting on a blindfold and throwing a dart at a map. Here's why. Investing in your backyard is usually not a smart strategy, unless you live in a few selected cities, which are landlord friendly and are great investing hotspots. The chances of your hometown being a sustainable rental market is highly unlikely. And referencing a list that you found online is probably not going to yield the results you want either. Who put together these lists, by the way? Typically, any online resource that details information about housing markets is going to be referencing the hottest markets, which is not exactly what you want for a long-term investment. Sure, you may be able to collect higher rents in cities like Miami or New York City, but you're also going to have a lot of other headaches, costs, and variables that can leave a bad taste in your mouth. That's not the approach we're going for here. Recently, I saw a list talking about hottest real estate markets. It talked about Boise, Idaho, and Salt Lake City, Utah. What they're saying is those are hot real estate markets for you to go and live there, right? So the prices are super hot and highly inflated, but they are not good investment markets. I would never invest in Boise, Idaho at those inflated prices, or Salt Lake City. Again, those lists are a total distraction. If your investment strategy is based on providing affordable and safe housing while playing the long-term game of building wealth through real estate, then you're going to want to steer clear of overinflated hot markets like the ones I just talked about. So conducting thorough market research is the only way to ensure the neighborhood or the area you're considering is both desirable to renters as well as profitable place to purchase assets. If you fail to do the proper market research, you're setting yourself up for a whole host of problems, not just limited to lengthy vacancies, crime, frequent tenant turnovers. The list is endless. Now let's go through the top metrics that you should be looking for in a rental market. Number one, vacancy rates. As a real estate investor, vacancies have the potential to be your biggest cost. While vacancies are an inevitable part of being a landlord, you will always have a vacancy at some point. You just got to get used to it. You want to mitigate them as much as you possibly can. The last thing you want is your rental property to be sitting vacant for months on end, cutting into your bottom line. That's why it's critical that you get a clear understanding of what the vacancy rate is in a market. Now, there's not an exact science to pinning down a good vacancy rate, because it can vary greatly by city. So in the description below, I'm going to link you to the U.S. Census Bureau report on housing vacancies. This data is updated quarterly, and you can get a really good idea of what an average vacancy rate is and then compare it to the market that you're studying. I would also suggest touching base with a local property management team to see if they can give you a rundown of what's happening in that specific market. Just get on the phone and speak with them. They'll have a much better understanding of the local market conditions. Number two, appreciation. One of the best parts about investing in real estate is that your assets naturally grow in value over time. The longer you hold your investments, the more they're worth, giving you a higher net worth and more equity to leverage. So when you're looking at a rental market, you want to avoid cities that have off-the-charts rates of appreciation. This is a cautionary little red alert here, okay? So appreciation may sound great. I always like to say I invest in boring appreciation markets. So when you see San Francisco years ago when appreciation was like skyrocketing, or Miami, red alert, you want to see average and consistent appreciation, okay? To the tune of about 2 or 3% conservatively. I like to say kind of boring appreciation, not hot craziness like Miami or whatever you were seeing in Vegas a few years ago. Number 3, market cycle. I always like to say there's no such thing as one housing market. When you do your market research, you're going to have a full picture of what's happening in the market now, as well as the historical context. This includes looking at housing prices, mortgage rates, the demand for rentals, and then consider whether it's a buyer or a seller's market in order to gauge demand and competition. Every city has its own trends, right? No two cities are the same. So you want to make sure that you're investing in this market at an opportune time. Number 4 is job growth. This metric is an excellent indicator of population and economic health in a city. This is because when employment levels are on the rise, you're going to see a higher demand for housing. You can analyze regional markets through the Bureau of Labor Statistics to get an understanding of job types and wages in your prospective market. Number 5, job diversity. Staying in the realm of labor, you also want to see a wide variety of employers in your market. If you're looking into a city and you notice, hey, there are only a few employers here. There's like one super Walmart and there's one oil company. That's a huge red flag. When it comes to job diversity, you want to see a multiple American-based businesses, including hospitals and other healthcare companies, warehouses, colleges, universities, factories, schools, all of it. So when a market has high job diversity, it has lower unemployment rates and a higher availability of long-term tenants who want to rent from you. You see how this is all coming together? Number 6 on my list, crime rates. This is a metric you don't want to overlook. I just want you to pretend that you're a tenant for a moment in this scenario. Would you feel comfortable renting a home in an area where there are high rates of theft and violence? Of course not. Crime data can vary vastly from neighborhood to neighborhood, so be sure to dive into the city's local crime data to ensure that you're providing a safe home for your tenants. Additionally, a local property management company can give you a good idea of what to expect in terms of crime. Now, while numbers and statistics are a useful tool, again, a property management company will have the firsthand experience to help you determine if you're investing in the right area or is this a bad crime-ridden area. Ask them. They will tell you. Number 7, school ratings. Again, take a second and imagine you are a tenant, okay? You've got 2 children or you've got a daughter, a son, whatever, and you're looking at what types of schools you'd feel comfortable sending your children to, so you're going to rent an apartment in that school district. What kinds of ratings would you like to see? Well, a great local public school system can encourage a tenant to stay a long time in a property, okay? They're going to be there for 5 years, 6 years, 7 years. It's a surefire sign of a thriving city to have good schools and then long-term tenants who want to stay in that school district. Very, very important. In fact, it is one of the centerpieces of how we invest and how we do our properties at Morris Invest. All right, number 8 on our list, legal environment. Legal issues have the potential to be the biggest headache of your life. So do your best to invest in states and cities with landlord-friendly legislation. Get a solid understanding of the eviction process, the rental licensing, security deposits, tenant damages. You want to invest where you'll be treated fairly as a landlord. So be sure to do your own due diligence and research these rules and regulations before you invest. Number 9, property management. Does this market have multiple property management companies that are reputable? I would advise you to invest in cities that allow you to have multiple options at your disposal. I have an entire video on what to look for in a property management company. So be sure to check out that video. We'll link it up here in a card above. And be sure to check your desired rental market and make sure that they have multiple property management teams that you can trust. That gives you options. It shows you that you are investing in a desirable rental market. And number 10, the local economy. This is a bit broader, but it's important that you dig into what's happening in the local economy. You want to see the public transportation. Do they have multiple amenities? Are they building new attractions, new parks, as well as multiple options for shopping and dining or new restaurants going in? If the local economy is thriving, that's a sign of a great rental market where people like to live. Market research can be lengthy and exhaustive process, but it is indispensable to your success as a real estate investor. The mantra location, location, location exists for a reason. Taking into account the 10 factors that we talked about in this video, it's going to give you a great start on finding an in-demand, profitable rental market. And if you want to reap the benefits of buying real estate without doing market research on your own, at Morris Invest, we've done all of the groundwork for you. Our acquisitions team spends years analyzing market data, taking into account everything we just talked about in today's video and more. In fact, our full service approach is designed to take the hassle out of investing, including all of the science of market research. So if you're interested in learning more, you can actually schedule a free call with our team. Just go to our website, morrisinvest.com. We'll have links to that in the description below. I hope you found this video useful, and most of all, I hope that you'll use this information you learned today to begin creating financial freedom for you and your family. So go out there, guys. Take action. Become a real estate investor. It's the #1 way to build wealth. And we'll see you next time, everyone.